And the inflation number come in at 6%. CPI for February, released this morning at 8:30 a.m. Eastern Time. The market had a bullish attitude going into the report. It snapped down quickly right at the time of the report, probably computers. We see this in the grain markets when we have monthly USDA reports. Then it just snapped right back, and it seems buoyant, seems comfortable with this inflation number. And I'll see if I can bring up some charts here. And I got a new site over at the Fed Reserve's Fred system. I'll show that if I can remember it here. So here's the intraday chart of 6-hour chart of the S&P 500 futures, the June futures. They're still trading to March. It's going off on Friday, I believe. We've already jumped here to June. Any rate, what we wanted going in this morning was this is a level 4 bottom, bounced in a level 4 top overnight, Sunday night. So proud of the model saying it's going to do it. They're going to bounce it even with this bad banking news, but then they're going to sell it as well. And they sold it overnight, sold it down into the morning to start Monday morning. And basically it looks like this is where people got out, that they were scared over the weekend, said, oh, I should have sold more over Friday, the end of the world, these banks are going to crash and burn. They sold, but it really wasn't necessarily that much selling. Volume jumped, of course, but then it just turned stable the rest of the day. It was stable overnight and now positive in overnight trading. We're going to open up here for the day session about a half hour. All right, what we wanted, however, is we said, it's supposed to have been up and then down into today. Well, it may still go down today, so be cautious. I know I'm bullish, but be cautious. It could go down today, up tomorrow for the level 4 interweek trends and all those larger trends, okay? But what we wanted inside, we said, this looks like a sloppy pattern. All through here, they didn't really know what to do, when to do, but they were trying to do something, okay? And we think it breaks into a half pattern like this, which isn't a model. We just don't talk about it. Use as much as a variety of those kind of half patterns we use. But we think it's quite possibly bottom now. Now, the problem is we've got to get that cash market open. So maybe the cash market will say, okay, we got 6% inflation. That's better than 6.4. And by the way, most of the polls nailed it at 6%. True-flation was 6.1. I was 6.1 or lower with preference closer to 5.9. I'm feeling good about myself. I'm feeling good about true-flation. I'm feeling good about these polls actually getting more accurate in recent months of keeping up with what the government's doing. They've pretty much come to the conclusion, always forecast the smallest amount decline and then be surprised it was bigger because the government is like a snail. It's not keeping up with inflation, okay? At any rate, it worked, all right? And that's not a bad decline. We're working. But the market may step back and say, yeah, but we're still at 6%. The Federal Reserve needs to be above inflation to really make an impact. So we're still moving too slow. It's still a high number, period, regardless of this war on inflation. So there's still lots of work to do. So they may just say, beautiful, everybody forecasted, we got it right, and at least it came down, but doesn't really matter. Things are still bad from inflation point. So they may still sell. In addition, just as I spoke of earlier this morning, they probably feel the need to flip back and worry over these banks. Is this a contagion? Is this going to spread through? Is this going to bring us lower? And right at the moment, it feels like maybe they're still just playing this inflation game and technical game for intraday trading, but it almost feels like maybe they're willing to get over the banking too. And some of those banks have already come back. One of them's up 20% this morning, okay? At any rate, this momentum looks good to me. I think it's going higher tomorrow for level 4. That's the best forecast. Problem is the cash market may feel the need to retrace overnight some, just to say, yeah, the futures got it right and I want to do the same thing, but they may go lower than what we'd like to see. Keep in mind, we have downside potential of 3,800 or lower, and we have another study also saying 3,800 or lower, but that study says it can also go to 4,000 or higher, more likely 4,020 or higher. So we're going to go with the idea it's moving higher tomorrow. Now, what we've said all along is this is the last, hopefully the last level 3 pattern within that entire down move of latter half Feb into March. And we said it could bottom this late. We were sure it was going to be sooner, and we took our best chance, and we were so confident right in here we got it. And then we get sidelined by the banking system, okay? Problem news. Any rate, we think this is a level 3, and starting today, any level 4 bottom, and there's probably only going to be this one today, maybe one more later in the week, maybe one more early next week, but we think it's this week for a bottom. We think it's this one, or maybe 2 days from now, that for some reason the market goes back down on us, okay? But it's possible, if this is level 4 bottom today, then also level 3, level 2, and level 1 bottoms. Level 4 simply means they can put it up in tomorrow and it's all over. And they're going to back it off, but if the bigger trends are up, they should only back off a little and then go still higher for the next one. If the bigger trends are still down, then it's going to come down more. That's all. Now, the level 3, on the other hand, if it's bottoming now, should rally into next week is the best forecast. All right? And we do have the interest rate hike next Wednesday from the Federal Reserve, and they're meeting Tuesday, Wednesday. We think this market's been beaten up enough that if they just feel a little stable about the banking problem right now, that they'll then say, yeah, we kind of overdid it. We can bounce this a little, even though they're probably going to raise rates next week and we don't want them to do it. Maybe they won't raise them, and that would be a positive thing, all right? So I think they're ready to buy this and put this up into next week for the level 3 trend. And just keep in mind the level 2, level 1s can be up into April, but the level 3s are going to cause the bigger zigzags along the way with an upward bias. And then the level 4s are going to cause these little day-to-day fluctuations all over the map, but with inside those level 3 trends with a general upward bias. Now also keep in mind this up move into April may not go as high as we wanted previously. We may have to just accept the fact there's headwinds, there's complications, there's problems. But the point is, after a setback in May, this market ought to be higher in June, July. We think it's going higher into late August, early September, probably another setback, and can be higher still, or at least have a firm tone going into the end of the year, and we're still going to get an up year. But it's possible it's the latter half of this year is going to be much better than the first half, and we may be sloshing around in mud all the way to that May bottom, okay, and still with some downside risk here, but ideally not. It may not rally as well as we like, but in general we see it going up in April, not pulling back to these price levels or lower by May, and then still higher later. So hopefully that gives you some structure of how things are rolling through this year within a much larger bull market than this year. And in the meantime, the structure of what to anticipate going into April, even though it's probably not going to be as bullish as we previously forecast and as we would like. So what do you do with this? I think it's an okay time to buy, just as we also said buy here and unfortunately bought a couple times more. And yes, we're throwing darts here of coming to the final analysis. I think if this market's going lower 2 weeks from now, we will trigger a time stop and we will be nervous we got problems all the way to May. Doesn't make sense, shouldn't happen, but it may, and I want that time stop to hopefully help us out to understanding that. But right at the moment, this is going higher even as I'm looking at this, but this is a delayed quote. I hope they don't get too carried away, because then we're going to have a gap open at 9:30. They need to knock it back, then take it higher. Because if they keep taking it higher and run away with it, it makes me nervous down the road. There'll be some other kind of problem to bring it all the way back again. But at the same time, I think people are nervous missing out. I think they respected the decline, and now they're saying, hey, it's time to get back on board here. All right, now I'm going to go to the daily cash. I'm not going to do the weekly and farther out. I've already explained that enough. And this is the cash right here. So this morning, this should open up, maybe. Maybe they'll set it back here in the next few minutes, and so it won't. But if it does, they should set it back, fill this little gap. And what we're saying is we're at risk. It's still going to take a few days to find that bottom, but we think there's a possibility it bottoms today and not at the lowest price. All they got to do is pull it back intraday a little bit, not take it lower still, put it right up. Also notice that we used this rally as a sucker's move, which, yes, it turned out to be a sucker's move, but it looked very good while we were in it. We used that for a critical point downside objective, and look at that, went right to the minimum. There's still other lower targets, as we've warned you. But it's also oversold, warning it ought to be limited downside, and we ought to start looking for a bottom, and lo and behold, the model's looking for a level 3 bottom, if not those much more important bottoms this week, okay? So if we can get it also above yesterday's high at 3905.05, more importantly, maybe the 5-day average, which I'm guessing is around 39.22, that's going to start to look constructive, and we think there's potential to get this over 4,000. But again, we may still be sluggish mud, at least for this week, just because of all this banking problems and worries. Okay, now we think interest rates can rally here going into next week's rate hike by the Fed, but we're not convinced that should cause a problem for the stock market. They both were beaten up. They slammed rates down, they slammed stock market down. Normally you would expect the two to go opposite directions. Okay, so we get it, because they were bailing on stocks and buying bonds for safety. They liked the interest rate and they were locking in interest rates. Perhaps they'll now get nervous over rising interest rates, okay, and they'll sell the stocks more. That's a risk you have to consider. But overall, we like this, that we think it's going to find its feet here near this December bottom. And we don't think it's going below it on down to last year's bottom. We don't think it's a bear market long term. We don't think the bull is already dead and flipped back to bear, and none of that stuff that people are preaching out there, okay? So we think this is a bottom here, but we can be off a few days for this particular structure, and unfortunately we won't know if we're going to be wrong on the rally into April and later, unless it's going lower from 2 weeks from now, and that's not an official time stop, but I suspect that's what we're going to do, or I'm going to do here as we're running the model here. At any rate, let's give the bulls a chance here, an opportunity here to bottom out off this inflation report. Now let me check some data since I'm taking so long. So this is the latest CPI index. Let me get the dates there for you. And as you can see, basically forever, prices have gone up. We've always paid more at the store, okay? And even though we've had some very productive times and lowered, so why do people get all excited? If it's gone up forever and it's going to go up forever, and I believe it is, why do we get so excited over these inflation reports? Well, this is just an index where they're combining everything we're spending money on, okay? Or not everything, but a huge list. At any rate, what we get nervous over is the speedometer of that. How fast are prices going up? And we don't like it when it starts getting 4 or 5% higher. In my opinion, we should not be nervous unless it's 7% or higher, and we were there last year, so there was a reason to get nervous and the Fed to beat up on us, even though I think it's a silly way of beating inflation. They should not be beaten. They should have developed a new system all these decades and basically sat on their hands and come up with nothing, apparently, okay? So, when we're at 6% right now, that's somewhat of a reason to be nervous, and if we can get it back to 5%, I'm not nervous, but I don't like it. And under 5%, we get down to 4%, I'm no longer nervous, and I kind of like it, kind of don't particularly care. I don't need 2%. I'm happy bouncing around 3 or 4% the rest of this decade. Some people would not be. They would say that's just too much. So there's always debate of how much is this hurting us and how scared do we want to be. But notice this jump here, okay? And then here's the jump in the 1970s, and really not as impressive as this one. So it's understandable the Fed really decided to beat up on this, okay? Now this is a new site, I believe, from the Federal Reserve, and it's a dashboard, macro dashboard. You might find it at Fred, okay? I'm trying to think of the address now. It's the Fred site for the St. Louis Fed, okay? And so I pull a lot of data in that, so there are a lot of economists and people, and they have charging to set up a dashboard. But there's now this new dashboard of macroeconomic data, just trying to make it easier for people to go to one place shopping. So what we have here, here's the real gross domestic product. I guess I should leave this for Thursday's update. But to me, this is getting to a bottom, and they're even forecasting a little better GDP over time. So I won't spend too much time. Here's the unemployment rate. They do think unemployment's going higher this year because they're beating up on the economy, and they're actually hoping for it. I think they're going to be disappointed. It won't go up that much. And normally what happens is you explode this for your once-a-decade recession, spend a slow time going down. This time there was record fast explosion because of this COVID, just strange, weird, but also record fast bringing it down. I wouldn't be surprised. This is going to chop around and scare us at times, but basically just stay down to the end of the decade when we get a normal recession and get an explosion out. This is the PCE inflation the Fed is watching, and look at this. It is rolled over. We're going to make it, but notice how long they're taking to forecast this actually dropping down into here into these other levels, and it's still not apparently dropping fast enough for people. And then this is the Fed rate hike, and yeah, they're probably going to put it higher here, and they're saying it can level off, but it might actually come down a little as well along the way. All right, that's what I've got for you for wrap up here today. And I don't know why this one site still does not update. CBS Market Watch has disappointed me. It's a nice little free site for people not using quote systems. At any rate, let's get back to what's going on with the futures here. One last picture here for the June futures. See where we're at. Hanging right up there, the high. So if they hang in there to 9:30, we only got 15 minutes. Going to get a gap higher. I'd like to see them knock it down, fill the gap, take it higher later in the day. I think we're on our way for something constructive. If they just run away with it, it may be constructive and stay up for a long time, but if something goes bad, then unfortunately that little gap might be a downside target. That could be something that's going to be a nuisance, gnaw at us here, if you will. So I'd like to see him actually fill it this morning, get it out of the way, frankly. I really don't want to see him take it below overnight lows. I don't want to see him take it back to yesterday's low here, but that's not necessarily a sign that we're wrong on our forecasts of higher into April. Past results are not necessarily indicative of future results. Have a great day. Thank you.